Hey guys, what's good? I'm Andre and today I want to walk you guys through a pretty surefire way of making money as soon as market volatility starts dimming down, guys. Before we jump in, I'm gonna plant 100 trees as soon as our very young channel reaches 500 subscribers. Help me out, guys, and we're gonna help the planet out as well. So I want to have a look at an indicator with you. Guys, please say hello to what is the VIX. It's basically the volatility index, and it's also called the fear index. Now, you obviously don't ever want to be caught holding something like this, but there are different ways through which we can use this to make a good chunk of money as soon as market volatility dims down. The one thing that I want to draw your attention to, guys, is these just ginormous spikes. As you imagine, this one from over here is the COVID outbreak. Now what the VIX is also called is the fear index, and when more fear is in the market, the VIX tends to shoot through to the sky. As you guys can see, every single market correction, pullback, call it what you may, bear market and so on and so forth, is being received with these pretty significant spikes in the VIX. And I bet you must be wondering, how would we ever be able to time something like this and be able to make some money off of it in obviously a way that wouldn't be a Hail Mary, wouldn't be a YOLO, wouldn't be a bet. So guys, the thing we need to look at is that after each peak, what happens? It comes back to the mean. There comes a new peak, it comes back to the mean. New peak, back to the mean. Every single time the VIX settles down. And what's great about this is that when there's a VIX, there's a way. But jokes aside, guys, we have different resources to be able to play off of the VIX. So with that in mind, I want to introduce you guys to the ticker called SVXY. Now SVXY is the short inverse of the VIX. It's basically an ETF that trades exactly inverse to the VIX, and while it doesn't have quite that same velocity and madness to it, the greatest thing is that whenever there's a spike in the VIX, the SVXY comes back to the mean and then recovers as the VIX settles down. Another spike in the VIX, another recovery. Another spike in the VIX, another recovery. And you guys can see how many times the SVXY is doing exactly the same thing. And this is exactly what I did just now. When I bought the SVXY, when basically the VIX was almost at highs, honestly, I waited for this very big spike over here to settle down. I waited for the next day to see what happens, and then I entered just to make sure that I'm not buying it when it still has 15-20% of a downside. And the greatest thing about this video, guys, is that you don't need to do this now. As a matter of fact, I just went ahead and did this video with a few days delay just to make sure that I don't catch anybody trying to do exactly what I'm doing and time it like this. I want you guys to be able to learn and replicate on your own when you guys see the signals, not when some YouTuber is telling you what to do. So with that in mind, what I did here is, again, I bought somewhere over here, I believe roughly at $56, and obviously I'm now riding the recovery rate. I believe that I'm now roughly at 7%, but I am gonna attach that screenshot for you guys. So what I'm planning on doing is waiting for the VIX to reach roughly $60 or maybe $61. It's gonna be very near the top. I'm not interested in just selling at the very top and buying at the very bottom. I just want to capture a percentage, and as you guys can see, I am waiting to make roughly 14%. Maybe I'm gonna be a bit more conservative and sell it once I'm able to make roughly 12%. So with the SVXY at $61. Guys, this is a very easy way of making a buck when the market is still very volatile, or when the market is unsure of direction. You can just don't go too heavy of a position here. So maybe 5% of your portfolio is too much for something like this, but definitely go with 1-2% of your portfolio whenever you do see a clear indication of the fact that this might be a moment for you to do this. Now, some of you guys that aren't yet knowledgeable about these might be wondering if there's any good way to actually play the VIX spike. Maybe you guys have gotten into a way of really knowing whenever the markets are at all-time highs like this and want to be able to actually play the VIX as the market corrects and gets back to the mean itself. So thankfully there's another ETF, guys. It's called UVXY. And with UVXY, it's basically an ETF that tracks the VIX but makes it less intense and less insane. So as you guys can see, maybe you were able a few weeks ago to identify that the markets are at all-time highs and wanted some sort of hedge for your portfolio and didn't really want to hedge with options or by buying the triple leverage SQQQ, for instance. So you're wondering, how do I play the VIX? Now the UVXY here is a very good example, and for instance, let's say you get in when the party already sort of started. So we're gonna buy this first candle here from above the exponential moving average, and we're gonna ride it, let's say halfway to the top. We're gonna make an insane amount of money, 50%. This is a fantastic way, guys, to hedge whenever you see a potential market correction happening. Now, if it doesn't happen, it's fantastic, but if it does happen, we need to be prepared. And what I always try to encourage you guys is to, again, not go in with a heavy position. Don't go in with 5%, don't go in with 10% of your portfolio, because maybe you read the market wrong and it continues to rally. And this has happened so many times before. So maybe you're somewhere here, you see the market pulling back a tad bit, and you think now's the moment to buy the VIX, and it shoots back up even more than it has for the past few days prior to that. So it's really important to not go in with too large of a percentage of your portfolio, guys, but just enough so that whenever the market does start bleeding like this and you do lose a lot of your long positions, just to have some added cash into your portfolio as a hedge. Maybe you're playing on margin and it's great to have that extra bit of cash on hand for those moments, or maybe you just don't want to take as big of a hit and have the profits that you're making off of playing UVXY or SVXY be something that you can use to buy the dip on some of your high conviction stocks. Now for the SVXY, the thing, or the greatest thing, is that it actually tends to recover faster than most stocks do. So as you guys have noticed, we are not gonna try to sell the very top here. We're gonna try to sell before it reaches the top, and usually what happens is that the VIX settles down and the SVXY can recover before the stocks can recover back into their stride, especially some of the more volatile stocks that some of you guys might be trading, like ChargePoint, Workhorse, so on and so forth. So that's all for today, guys. Please leave it in the comment section below if you have any questions and if you'd like me to cover anything in particular. I'll catch you guys next time. Take care.